Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Wednesday, the 9th of July. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Donald Trump triggers turmoil in global copper markets with his plan for a 50% tariff on the metal.
The EU looks to protect Airbus and some car makers as it nears a trade deal with the US.
Plus, banking, booze and bond. Bloomberg Intelligences list of the 10 companies to watch in the coming months.
Let's start with the roundup of our top stories.
US President Donald Trump has sparked fresh chaos in metals markets with news of a higher than expected 50% tariff on copper imports. The planned levy caused a record spike in US copper futures and a drop in the global benchmark on the London Metals Exchange. Our managing editor for commodities and energy, Clara Ferrari-Marquez, has the details.
50% is more than expected. It's also coming a bit faster than expected. There's also read-through to other base metals, but copper is, if you think about the metal that is really key to manufacturing, it is this. This is the metal that we use in anything that has to conduct electricity, basically. So grids, cars, appliances, anything at all. And US manufacturers are already paying that. Of course, the intention here is to stimulate US production. The trouble, of course, is that it takes a very long time to build a mine, a very long time to process it, and this is not going to have the immediate effect that the Trump administration would want.
Clara Ferrari-Marquez was speaking as Citigroup analysts call the announcement a watershed moment for the copper market in 2025. Prices climbed as much as 17% on COMEX in New York on Tuesday, a record one-day spike to an all-time high before falling by more than 4% in early trading on Wednesday. On the London Metals Exchange, copper is currently trading down 1.4%.
Well, President Trump's copper tariff announcement came as the president vowed to push forwards with his aggressive tariff regime in the coming days. The president now says that he will not offer additional extensions on country-specific levies, which are set to hit on the 1st of August. That's despite previously suggesting that that might be the case.
August 1st, they pay. And everybody pays, everybody has to pay, and the incentive is that they have the right to deal in the United States. If they don't want to, they don't have to pay, and they don't have to deal here.
President Trump also suggested that drug companies could face a tariff as high as 200% on imports of pharmaceuticals if they didn't move production to the US in the next year. The president also told reporters that despite progress with the European Union on a trade deal, frustration over the bloc's taxes and fines targeting US technology firms could result in him unilaterally declaring a new tariff rate within the next 2 days.
Trump's latest threat comes as Bloomberg has learned the EU negotiators are focusing their efforts on securing a preliminary trade deal with the US that would exempt commercial aircraft from some levies, potentially providing a boost to Airbus. It's understood that the EU and US are also discussing an offset mechanism that would allow European companies manufacturing automobiles in the United States to export a certain number tariff-free. That would benefit companies such as BMW, Mercedes and Volkswagen. Other car makers, including Porsche and Ferrari, which import all of their cars from Europe, would not be able to take advantage of the carve-out.
French President Emmanuel Macron has urged Britain and France to move on from Brexit to work side by side. France's leader addressed Parliament on the first state visit by a European leader to the UK since the country left the EU.
We have to work together in order to defend an efficient multilateralism and to protect the international order as we forged it after the Second World War.
Macron added that he would work with Britain to tackle illegal migration, and he called on parliamentarians to recognise the state of Palestine. Despite the friendly tone, France has been a key holdout during recent talks with the EU, notably over fishing rights, but also on letting the UK sign up to a new EU rearmament fund.
Britain is at risk of a £22 billion surge in government debt interest costs. That's according to the Office for Budget Responsibility, which is warning of a coming shock caused by the ageing population combined with climate and pension changes. David Miles is one of the economists on the Fiscal Watchdog's committee. He says you can add poor productivity growth to the looming economic risks for the UK.
You just had a series of things that hit the UK every 5-10 years, like a great hammer coming down on somebody's head. And hopefully, the next 5 or 10 years doesn't see the UK hit over the head with a big hammer every 5 years like it has over the last 15 years. But having said that, the longer it goes on, very, very low productivity, obviously you've got to assess whether your best central forecast of productivity growth is about right or too optimistic or too pessimistic. So we're in the process of doing all that now.
Miles and the OBR concluded that the public finances are on an unsustainable path. The warning comes amid growing concerns over a debt pile that is now close to 100% of GDP, levels last seen in the early 1960s and forecast to rise sharply. Without action, the OBR says debt will spiral to more than 270% of GDP within 50 years.
The chair of the official body which oversees the UK's Office for National Statistics says that he wasn't told about a crucial report detailing major cultural failings at the organisation. With more, here's Bloomberg's Ewan Potts.
Problems with the UK's economic statistics has been a long-running saga plaguing economic forecasting and undermining the Bank of England's oversight of monetary policy. Robert Choate, chair of the UK Statistics Authority, has now said he was not told about an internal probe at the Office for National Statistics and only found out by chance more than a year later. He says at a minimum the UKSA board should have seen the report. In London, I'm Ewan Potts, Bloomberg Radio.
Now, the Office for National Statistics declined to comment on the latest reporting, which comes after an external review published last month that found that ONS bosses were reluctant to hear and act on, quote, difficult news.
Bloomberg has learned that SpaceX is discussing plans to sell insider shares in a deal that would value the company at around $400 billion. That would give Elon Musk's rocket and satellite maker the largest ever valuation for a privately held US company. It comes as the world's richest person is locked in a public feud with Donald Trump and says he will launch a new political party. A representative for SpaceX didn't immediately respond to a request for comment.
And those are our top stories for you this morning. Looking at the markets, so copper at the moment trading in London down 1.4% with President Trump's latest tariff threat. Chinese shares also on course for their best close in 3 years. Why? Well, of course, it's the negativity around the economic picture in China and the fact that there's speculation of more measures to ease deflationary pressures in China that has lifted things there. The MSCI Asia Pacific Index, though, is in the red this morning. Looking also at US stock futures this morning, we are down in the red. US Stocks 50 futures up 0.3%. It was interesting, though, that it was the specific sectors that President Trump was targeting with tariffs yesterday that moved. The broader S&P 500 really didn't budge at all. The dollar this morning is slightly higher right now, as we also look at the euro trading at 117.14, down 0.1%. And also worth mentioning the 30-year bond US yields up a basis point at 4.93. So we're heading towards 5% yields on the long bond this morning.
In a moment, we'll bring you more on the market reaction to Donald Trump's copper tariffs, plus the 10 companies you should be watching in the coming months, according to Bloomberg Intelligence. But another story that caught our eye this morning about a food fair with a difference. Bloomberg's Matthew Kronsberg has been reporting from the Summer Fancy Food Fair, which definitely sounds like the sort of place that I'd want to be. It was in New York, and it's about the food trends of the future. He says that it's a window into America's changing tastes and growing appetites, and it gives you perhaps a sense of what the country will be eating over the coming years. A lot of Indian-inspired food, actually, he picked up. Things like Bombay Spice Crisps, for example. There was also carbonara-flavoured ramen, which sounds like an interesting one as well.
Yeah, ramen, I mean, it's yes, I think that is very wild.
Not two flavours I would have put together, put it that way.
No, exactly. I'm just wondering when all of these snacks will actually be arriving in London. Yeah, because, I mean, the other thing is that they're also all, interestingly, concerned about tariffs, all of these manufacturers too.
Yeah, indeed. I mean, look, it's, you know, yet again, the conversation that stems through so many parts of business too. The other part, of course, that the food industry is dealing with is the rise of GLP-1 weight loss drugs as well. So there's a lot more appetite for things like protein-heavy products. And also, people still want treats, but in smaller sizes. So that's another part of that story being involved as well. We'll put a link to it in our show notes so you can read the full piece by Matthew Kronsberg. on the latest twist in Donald Trump's trade offensive. The US president announced a 50% tariff on copper imports. Bloomberg's Jessica Zhou, who leads our team covering metals in Asia, joins us now for more. Jessica, great to have you with us. The industry had been expecting tariffs on copper. Is this much worse than had been expected?
I would say the 50% was much worse than many were expecting, because I think the base case expectation for a lot was around 25%. But the degree of impact will actually heavily depend on the details, because there aren't much clarity at the moment. For example, what are the forms of copper that the tariff will apply? Will any of the major shippers into the US get exemptions or able to negotiate a lower rate? Or would there be any kind of grace period ahead of its implementation? So there are a lot of unknowns here. We'll only be able to gauge the scale of the impact when those details are known.
The thing is, it looks like flows of copper were already moving in anticipation of a possible tariff. And so that also affects how, the prices have reacted. What has been the price reaction around the world?
Yeah, so there are mainly two prices we're talking about here. There is the COMEX copper in the US, and there is the LME prices in London. So in summary, since the news last night in the US, the copper has been surging. And then today, when London markets opens, the prices are down. So because of these moves, the premium of US copper prices over the equivalent of London prices surging to a record level. So the premium has been surging already since over the past few months, since Trump launched the Section 232 investigation. Now, with announcement of 50% tariff, as I said, it's higher than a lot of people's expectation. So you would expect this kind of reaction to price in the latest.
This is all happening, Jessica, at a time when demand for copper is expected to surge in so many key industries. What does that mean for the price trajectory from here?
We should be looking at this in short term and longer term. So in the short term, so as I mentioned, that there was a premium, and then that has incentivized a lot of traders to ship copper into the US and causing some structural tightness in the market. But now with some clarity on the tariff, so the copper supposedly will kind of stop being shipped into the US. So the tightness in the market will be eased as there will be less shipment. So in that sense, it will be bearish for ex-US prices. So that's why we're seeing some kind of weakness in the London prices. And even with the surge in the US prices, in the near term, there is still worry about kind of the demand destructions with the high tariff. So you would see some bearishness in the short term, but longer term, so the outlook is not bearish, because the demand from data center, from power grids, from solar companies are still there. So you would always see support for the copper prices in the longer term.
What do you think it means for countries that produce copper producing nations?
So I think the countries that are most impacted will be the big sellers into the US, such as Chile. Chile is accounting for 38% of the total import volume into the US, and followed by Canada and Mexico. And for Chile, I think there is a lot of speculation at the moment that Chile is going to be able to negotiate a lower rate, because it's such a large chunk of US copper imports, and then it's very difficult to replace Chilean metal. So we will see what comes next to see if there is any details, or really there is any exemptions or lower rates for these producing countries. But if in the end, Trump and these other countries, they cannot reach an agreement, then these producing countries will have to look for other destinations to diversify their markets.
Okay, Jessica, great to have you on the programme. Thank you very much for joining us. Jessica Zhou there, who leads our team covering metals in Asia.
Now, Bloomberg Intelligence has published its list of 10 companies to watch in the coming months, with banking, booze and James Bond's cars in focus. Did I get that out right? Tim Craighead is Director of Research at Bloomberg Intelligence and joins us now with more. Good morning, Tim. Just tell us about the list and how you picked those 10 in particular.
Yeah, sure thing. Thanks for having me on. So these 10 are all part of a broader list of what we call focus ideas. Focus ideas are companies where our analysts around the globe, across sectors, have a strong fundamental view about some important element that's out of consensus, and they've got catalysts to change the market's perception. These 10 all have catalysts coming up in the third quarter that are quite important. And all of these are available on BI Focus on the terminal.
Tim, there are several consumer-facing names on the list. Is there a common thread running between them?
Yeah, it's really interesting. There is and there isn't. There is in that there are a couple of higher-end consumer names that we think are quite well-positioned in high-end sales, despite concerns about tariff this or whatever that, continue to be pretty well-positioned. For example, Diageo. It's the world's largest spirit maker. We do think that high-end spirits and the trading up is alive and well. And in addition to that, they had an inventory overhang issue in the U.S. last year, and there's lots of reasons as to why, but that's normalized now. And if you look at last quarter's sales, up 6% on a comparable basis, it's really strong, and we think that's going to continue this year. Dick's Sporting Goods, a U.S. company, is also very oriented towards higher-end sporting goods sales. They're launching bigger format stores that are doing really well. It's a classic consumer retail play on the higher end. That said, EasyJet here in Europe isn't really it's not a high-end play, clearly. It's cheap and cheerful air, but they're replacing a bunch of their older planes with newer ones that are much more fuel efficient. We think it's a margin story for EasyJet relative to Ryanair. And I would throw out Aston Martin, since you brought up 007. Yeah. That clearly is a higher end consumer story, but this one's one where we have a cautious view. Even though they've got new models coming out, they are running against stiff competition from Ferrari, from Lamborghini. They don't have that many V12 models, which is really what people want, notwithstanding the world of EVs. And we think that they're cash strapped and may have to raise some capital.
Yeah, that's been a kind of turnaround story for some time. So really interesting. AI, artificial intelligence, has also been running through your focus ideas to watch in most instances over the last 2 years. So what about this time round?
Yeah, two interesting twists are on the list related to this. One is Cadence Design. It's a U.S. company. It's not the semiconductor company. It's not the semi-equipment. It's not the hyperscaler. This is a software company that makes software that allows you to design chips, which NVIDIA and Samsung utilize their software. Interestingly enough, their design software is actually now AI-enabled. It's new feature set and this, that, and the other. So it's AI on AI. Really interesting company. And we think that there's a momentum story here growing. Keppel DC, probably never heard of. This is a REIT company. It's out of Asia. It's Singapore-based. Singapore is in many ways becoming an AI hub. And they have the space that hyperscalers and others are building out in Asia, in Singapore.
And Tim, briefly on banks as well. What are you picking out in that sector?
Yeah, it's interesting around the globe with central banks, raising rates, lowering rates, what have you. The banks themselves are a bit confused or confusing. You got to be really careful. Capitec in South Africa is a lender that kind of goes beyond the cycle. It's a low-cost provider. They're expanding their footprint, gaining share, moving into new areas of finance, and we think they can use their low-cost banking model to extend market share. So it goes beyond the central bank cycle. AIA is an insurance company in Asia that's similarly not all that exposed to the interest rate cycle. They're taking advantage of Chinese putting money into Hong Kong in a diversifying way. And they're also expanding their own footprint in China. So it's just a pure growth story outside the financial cycles.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.